Why gold, silver, and tech stocks are acting crazy right now. Gold pumps. Silver dumps. Tech stocks go full roller coaster. Portfolio one day is green, next day bleeding red. Confusing? Low-key chaotic. Today, I'm going to decode what's really shaking the markets, why metals are acting wild, what China is doing behind the scenes, why US tech just had a rough snap, and most importantly, what ETFs you should actually touch or dodge. Stick around. This one's a playbook, not hype. Let's roll. Okay, silver is volatile. No cap. We've seen silver get absolutely smoked from its highs. Almost 50% drawdowns top to bottom in some swings. That's not normal volatility. That's chaos. And then, just as fast, it bounced back. 30% plus rallies off the lows in some stretches. So what does that tell you? Silver isn't something you casually hold like a chill weekend meme. If you do that, you'll get wrecked. So here are 2 rules if you mess with silver at all. Rule number 1. Think long-term. And when I say long-term, I don't mean I'll hold till next Friday. I mean years. 5, 7, or more. Silver needs to be treated like a long-cycle asset, not a quick dopamine trade. Rule number 2. Keep position sizing tiny. If you've got a $100,000 portfolio, silver should be a sliver, 1 to 3%. Not 10, not 20, definitely not half your account. That's portfolio allocation 101. Ignore this rule, and silver will humble you. Gold, on the other hand, is the calmer cousin. Historically, gold moves at about half the volatility of silver. When panic hit the markets, gold fell, sure, but not nearly as savage. If silver is an energy drink, gold is black coffee. For most people, the play is simple. Buy gold on dips and hold. You don't need drama. You need stability. ETFs like GLD or regulated gold ETFs in India make this easy without physical storage stress. Now let's talk about why metals fell recently. 3 reasons hit at once, and together they smashed metals hard. First, the US dollar got stronger. When the dollar pumps, metals usually chill. Gold and silver are priced in dollars, so even a small move up in the dollar puts pressure on metals immediately. Second, the Fed sounded hawkish. Translation? Rate cuts aren't coming as fast as people hoped. When rates stay high, treasuries start looking attractive. And when bonds pay better, money flows out of metals. No cap. Third, exchanges raised margin requirements. Big clearinghouses increased collateral needs for gold and silver futures. That forced leveraged traders to either post more cash or get liquidated. Forced selling means fast drops. That margin hike was like pulling the rug out from under leveraged bets. Now here's the China kicker. Reports came out that large digital gold platforms froze withdrawals. People couldn't pull their cash. Liquidity disappeared. That turned into a mess and reportedly wiped out billions. The takeaway is simple. Unregulated platforms can implode and send shockwaves globally. If you're buying digital gold with unclear custody, that's a risk. Period. Meanwhile, US tech stocks took a hit. Nvidia slid, Meta slid, Tesla got choppy. Why? Because AI moved from hype to real capability. New AI tools can automate legal work, code refactoring, analytics, and internal workflows. Investors started asking the hard question. What happens if software margins compress? If enterprises plug in AI and cut costs, some legacy revenue models take a hit. So the market corrected. Not a crash, not the end of tech, just a repricing. ETFs took hits too. Gold ETFs dropped, silver ETFs cratered, tech ETFs corrected. But here's the key. ETFs are still the smartest option for most retail investors. They're regulated, they're liquid, and you can start small. Gold exposure, GLD or physical-backed ETFs. Silver, SLV, but keep positions small. Tech, diversified ETFs smooth out risk better than betting on one stock. So, here's the playbook. No fluff, just execution. Gold, buy on dips, dollar cost average, hold long term. Silver, small positions, long mindset or strict risk rules. Rebalance. If silver grows past your limit, trim it back. Use regulated platforms only. No sketchy apps, no random digital gold websites. Test withdrawals. Always. Small test first. And finally, upskill. AI isn't stopping. Adapt with it. All right, fam, that's the decode. Metals went wild because of the dollar, hawkish Fed vibes, margin hikes, and China platform issues. Tech got repriced because AI is moving from hype to hard utility. Strategy? Small, regulated, disciplined. If you want the ETF links and the one-page checklist I use, drop checklist in the comments and I'll pin it. Smash the like if this helped. And if you want a deep dive into silver trading rules or the exact ETFs I hold, say which one in the comments.